to our second panel to come up. I want to thank all my colleagues, Mr. Tierney, Mr. Cummings, Ms. Capter, Mr. Jordan, Mr. Turner, Mr. Isa for being here. Second panel, would you step forward and we will move to swear in the witnesses. While you're coming forward, I'm going to do some introductions. Second panel consists of Mr. Bill Shield. Mr. Shield is a journalist and investigative reporter for WJW Fox Channel 8 in Cleveland, Ohio, where he's won numerous regional Emmys, as well as the Edward R. Murrow Award for his reporting. Mr. Jim Rokakis has served as the Cuyahoga County Treasurer since 1997. Under his leadership, the office took an early role in combating the foreclosure crisis, particularly in regard to abandoned properties and the creation of a county land bank. He helped create and oversee the county's Don't Borrow Trouble mortgage foreclosure prevention program. Finally, Ms. Patricia Stringfield is a resident of Washington, D.C. and has lived here all of her life. She's been a homeowner since 1988 and has sought a modification of her home mortgage under the HAMP program. So I'm going to ask the witnesses to stand. It is the policy of our committee to swear in all witnesses. And I would ask if you would rise and raise your right hand. Do you solemnly swear to tell the truth, the whole truth, and nothing but the truth? Thank you. Let the record reflect that each of the witnesses have answered in the affirmative. Now, I'm going to ask that each of the witnesses give a brief summary of their testimony. I'd like to keep in mind that your testimony should be no more than 5 minutes in duration. Your complete written statements will be included in the hearing record. Now, Mr. Shields, our first witness, and his testimony is in the form of an excerpt from an investigative report he produced for Fox Cleveland's I-Team. If we can play the video, and if you have any comment over the video, that would be fine, Mr. Shield. Can we, staff, you want to, you're working on it?
So what we did here is, these are some pictures in New Orleans, and these are some pictures in Cleveland, interspersed, and we're asking you, can you tell the difference? That's part of Hurricane Katrina. Some of this video is Cleveland. They're interspersing with New Orleans. And the point of the story was to be that you can't really tell which is which. That is Cleveland right there, those 4 homes in a row that are vacant. Tony Brancatelli is a councilman. That is Slavic Village and what it looked like about 30 years ago, a middle-class neighborhood just south of the city. This is a sense of what Slavic Village looks like today. These are pipes inside a house that's more than a century old that had gas lamps in it, plumbing in the back. Obviously another shot of Katrina as we go back to New Orleans. Councilman Brancatelli showing us that it was the perfect storm in Cleveland that led to this housing crisis in many ways. These homes have outlasted their usefulness. The plumbing is in the back because they predate indoor plumbing, and the plumbing was attached later. And they're often flipped and sold and paint slapped on them, and then they're resold, and we have the problem again and again and again, which is what I'm saying, hopefully better than you're hearing it from me now, right there. And then the question is, are there ways that we can, improve the region, and are there ways that we can make things better? This is a pair of teachers. They are talking about the problems in their neighborhood and how they want things to get better and how they want to be part of the solution, and how they want to purchase this old abandoned home. And they had some problems making the purchase, some problems, quite frankly, dealing with the governmental agency that I think have been resolved. now, but this is on the west side of Cleveland. This is a totally separate area from Slavic Village. We're focusing only on one house here because it's next door to the new home that they invested in, and they're trying to make the city work just in their neighborhood, but it's very hard to do with that eyesore next to them, that they want to be part of the solution for bringing it down and putting a park, quite frankly, on that corner, which is not far from Lake Erie. It's a beautiful piece of property. And they're explaining that they're just frustrated by what's happened in the neighborhood that they've reinvested in, and that they want the neighborhood to get better, and they want the government, however it should, or to help them. That's their house on the right. That's the property that's on the corner. Behind them is a view of the lake. Councilman Brancatelli in Slavic Village indicating that, that the local officials need help making this happen. Talking about all the different for sale areas around Slavic Village. We had a lot of copper stolen from all of these homes when copper prices were high. This is what some people think the solution is, actually, which is to knock down these homes that no longer have value, give them to the neighboring homeowners, plant trees, do something other than having boarded up drug houses in the areas. This is and that is, if you look up top there, that's where kerosene came in, predating electricity. This is where all the copper was stolen when copper prices were high from these abandoned homes and people stole them for money. The tragedy in these neighborhoods and parts is a lot of older people still live in the area who can't leave. We're talking here, I think, about the infrastructure that still exists in these neighborhoods, banks, gas stations. The neighborhoods have not yet died. There still is the infrastructure that creates neighborhood there, if something can be done about what you're seeing behind me here. And I want to say these are not isolated neighborhoods. You could go to 12 neighborhoods in Cleveland and get this. This is explaining a process where how money flowed into a government account and how that was part of the problem. Again, I think that's been addressed, and I think that's the portion we're showing, Mr. Chairman.
I want to thank you, Mr. Shield, for being here and for the investigative report. We're going to go to questions to you when we finish with the other witnesses, but thank you for that presentation. Chair recognizes Mr. Rockakis. You may proceed for 5 minutes.
Thank you, Mr. Chairman. I'm going to ask the gentleman from IT to have those slides ready. I hope they're up. I'm the treasurer of Cuyahoga County. While the collapse of the real estate market has shifted the focus away from Cuyahoga County in Ohio, it's important to note, as you pointed out, Mr. Chairman, that no other community has suffered the cumulative impact worse than Cuyahoga County, Ohio. Cuyahoga County was first nationally from 2000 to 2006. When the real estate bubble burst at the end of 2006, and this dubious distinction, worst in the country, moved to other communities in places like California, Nevada, Arizona, and Florida, this crisis did not go away in communities like Cleveland or in states like Ohio. In 2006, the last year Cuyahoga County led the country in foreclosures, we had 13,600 foreclosures. We had over 14,000 in 2007, when we were no longer first, almost 14,000 in 2008, 14,000 in 2009, and we're expecting a similar number in 2010. A quick review of the county foreclosure maps. I don't know if you have them there. We have a glitch with ITM, so every time I attempt to do this, Mr. Chairman, I botch it. But a quick review of these maps would show you that the foreclosures, while they have decreased just a bit in Cleveland, the core city, in part because there's nothing left, they've really picked up in the inner ring and the outer ring suburbs. And if you move the progression through to 2009, you'll see those shifting dark shades result are density in foreclosures. They have moved from the core city 2007, 2008, 2009, the last year, and as you see, this cancer has spread out. Even more troubling is evidence that tens of thousands of loans that could be foreclosed are backed up and are at least 90 days late, as evidenced by this next progression of slides. You will see, and these slides clearly demonstrate, that delinquent loans are backed up in the foreclosure queue. Look at the 90-day slide to the right. Just keep progressing forward. What you'll see that there are tens of thousands of loans in Ohio that are now 90-day late. They've backed up in this foreclosure dam, and when they burst, and they will burst, it will add to the misery and despair we feel in our communities. This crisis has resulted in at least 35,000 vacant properties, 18 to 20,000 properties awaiting demolition in Cuyahoga County, and a population loss in Cuyahoga County that is second only to Orleans Parish in Louisiana, and we know why they are first. Cleveland, which had 473,000 residents in 2000 census, it has been estimated may drop to as few as 325,000 residents in the 2010 census, a 30% loss of population in just 10 years. Property values have plummeted throughout the county. Half of all sales in Cleveland last year, Mr. Chairman and members of the committee, were sheriff's sales. The consequences on governmental budgets, especially public schools, which rely heavily on property taxes, will be felt for the next generation. In one recent study, if you could put that up, it's the study of negative equity. Ohio shows up as negative ninth in the country, but Congressman Captain made a very good point. We never experienced the run-up of real estate prices that many of the other states ahead of us on that list experienced. So our losses were more significant as they took away real value, not one driven by real estate speculation. We are talking here today about the disappointment with the HAMP program. Those reasons have been well reported, but HAMP has been especially ineffective in Ohio. As you see on that chart, members of the committee, as only 3 states have experienced a lower percentage of loan modifications than Ohio. For all these reasons, we were stunned to see the rollout of the plan last week by the Obama administration to use $1.5 billion in TARP funds to assist California, Nevada, Florida, Arizona, and Michigan. How can a state at the epicenter of this crisis for so long be ignored once again? How is that possible? The only effective remedy in our experience that works in this fight is foreclosure counseling. And to Congresswoman Cummings' point, I am not talking about the 1-800 call-in numbers to call-in centers. I'm talking about the intense face-to-face personal counseling where trained foreclosure counselors work with homeowners in distress and stay with them as they do loan modifications. A program we established in Cuyahoga County, our Don't Borrow Trouble campaign, is one of the most effective in the country. It takes people who call 211 and refers them to 4 trained counseling agencies where people sit down face-to-face, again, not over a long-distance phone number. Homeowners are then assigned to foreclosure counselors who meet with them, gather financial information, assess the situation, and proceed to work on their loan modifications with the servicer. Our success rate in 2008 was 56% of those who came in and sat down with their counselors has their loans modified. Now, some of these mortgages are beyond repair, but our success rate when a homeowner calls us, again, as I said, we think is the best in the country, which brings me for my major reason for being here today, which is to plead with you, Mr. Chairman and members of this committee, to restore funding to the National Foreclosure Mitigation Counseling Program, or NFMC, which is an arm of Neighborhood Works. Reductions at the federal level to this program have resulted in direct funding cuts to counseling agencies in Cuyahoga County and Ohio, organizations like ESOP, a nationally regarded community group that is, I think, the most effective housing counseling agency in Ohio. Last year, ESOP received $1.7 million in funding through NFMC. Because of reductions in funding, their allocation this year is only $568,000. They are laying off counselors, housing counselors, beginning Monday. Other organizations throughout the state are doing the same. Last year, ESOP counseled 8,000 families statewide. This year, as a result of the cuts, they expect to only be able to counsel 3,000 families. The chart I'd like to show you there, the last chart, graphically demonstrates federal policy is moving in the wrong direction. Delinquencies are moving up, but foreclosure counseling dollars are moving down. It is incomprehensible, nonsensical, and wrong. Time is running out. If only 0.2% of the amount allocated to each of those states, assume an even split, $300 million, if 0.2% of the money is allocated to those 5 states last Friday were allocated to these programs, we could keep these housing counselors on and continue what I think is the good fight and the only effective program that has worked thus far. Thank you, Congressman Kucinich and members of the committee, for listening to me today.
Mr. Okakis, your testimony is very important, and I have just had staff take a copy of it over to Ms. Caldwell, who, unlike most people who testify in front of our committees, actually stays to hear what other people have to say. And I always appreciate that about you, Ms. Caldwell. But I make sure that Mr. Okakis' testimony, if you look at the maps, you see the progression, I think it would be helpful, and you'll understand why those of us in Cleveland-Cuyahoga County and in the state are so concerned when we get a signal from the administration that perhaps it's not looking closely enough at what's happening in our community. I also want you to know, Mr. Okakis, that this afternoon we'll have a copy of your testimony sent over to the Treasury Secretary as well. We believe this is a very important message. Another important message about to be delivered to us from someone who lives in the neighborhoods of Washington, D.C. And Ms. Stringfield, would you be so kind as to proceed with your testimony and share with this subcommittee what your experience has been? I thank you.
Good afternoon. My name is Patricia Stringfield. I am a resident of the District of Columbia, and I come here today to tell you a story of my situation. I'm a single mother who has worked my entire life to make sure that my son and I are taken care of and that he had a stable home environment. In 1988, I purchased my home from my mother. I did so because I had grown up in the neighborhood and I knew it would provide me with a peace of mind. I purchased the home for $66,000. Over the years, I've refinanced a few times to cover expenses, take advantage of lower interest rates, and to do some repairs and cover college expense for my son. When things seemed like they were under control, my mother developed a medical condition, forcing her to no longer be able to work, and I had to take over paying her bills. My mother has now been diagnosed with dementia, and I am now her primary caretaker. She receives Social Security payments to cover her insurance and her medicine, but little is left to cover food and basic expenses. When I contacted my lender, they told me that they would happily refinance my loan again to help me cover the increased balance on my credit cards and to pay off my son's school expenses. They suggested that I go to another lender to get a second mortgage, as my home had plenty of equity and it could help me pay the bills. I followed their advice and took out a second mortgage. This finally solidified my situation for a few years until the price of gas and utilities rose sharply. I depend on my car to get to work. Making ends meet became so difficult that I had to dip into my savings accounts until it was depleted. And at this point, I turned to taking out loans on my 401k until I no longer could be allowed to do so. Despite the financial stress, I was able to keep making mortgage payments for several months. However, I finally missed my first payment in September of 2008, and as I ran out of ways to get extra income, I attempted to work with my lender several times, but was not given any option for resolutions. I had to turn to my neighbors to help pay for food for me and my mother. I missed a few payments, received warnings of foreclosure from my lender when I finally was able to get in contact with National Community Reinvestment Coalition, NCRC. NCRC was able to arrange a workout only to find out that the lender on my first mortgage was unable to find an acceptable workout solution. This caused my lender on the second loan not to offer anything because the first was not modified. As the days passed and the foreclosure sale date approached, I decided to move out of my home because my mother's doctors didn't think she could handle being thrown out on the streets. I began to move out on February 22, 2009, into a rental apartment with my mother. We awaited until NCRC got us a resolution. The lender canceled the foreclosure sale, and I was put into a 3-month HAMP trial period. Because the modification on the first loan, my second loan holder was able to reduce my monthly payments by $100. But this news we returned, with this news we returned to our home in April. The landlord, however, asked me for 6 months of rent, claiming I had broken the lease. NCRC then stepped in again and is engaged in negotiation with the landlord. When I received the first trial modification, I made 2 payments on it, but then was sent another agreement to begin in June 2009 with a different payment amount. I made my payments for 5 months, only to be told that it was denied because of missing information. This was not the case, as we had submitted all documents to them. NCRC tried several times to get them to reduce the amount I owed, but was not successful, even though my house is worth less now than the amount currently owed. After they declined me again, my counselor at NCRC went back to the lender, asked them to review the file once more for the program. After several weeks of being told that I was in foreclosure again, I began to panic. I thought that we had already fixed everything back in April of 2009, but we were still in a back and forth. I do not understand how this works and became frustrated to the point of crying almost every night. I have listened to everyone that has helped me, and through the hard work of so many people over at NCRC, I hope that this is the last modification that I received this week, will be the final one and will be approved. I have had 4 HAMP trial modification loans. I hope that you can take my situation to heart and understand that these issues face real people and the decisions that you make affect us all. I don't understand how I can be told 1 month that we are okay and everything is on track to be modified, begin the trial period, and have it turned down because it seems to be technicalities. It seems to me that if I owe more than what my house is worth, they could just reduce what I owe to the value of my home. Thank you again for your time. I hope you can provide some help to other homeowners like myself who are struggling to get by every day but want to pay their bills and take pride in owning their homes. Thank you again.
Ms. Stringfield, thank you very much for testifying in front of this subcommittee, and in a moment I'm going to ask some questions of you to try to bring out more about the plight that you and your family have experienced, which is really something that many Americans are experiencing. It's my time for questions. I've got 5 minutes. I want to start with Mr. Shield. You showed pictures of a neighborhood in Cleveland, but you get around the city a lot because that's your job. Would you say that this effects of the foreclosure crisis in Cleveland's residential neighborhoods is just based on what you've seen? Is it pretty evident as you get around?
You can't miss it. Cleveland, as you know.
Make sure that mic is on. Would you try again?
Can you hear me now?
Yeah, go ahead.
You can't miss it. You could go into every neighborhood. You know, when we show pictures like this, one of the things that we're concerned about is, do people think we just went and took the one bad street in a neighborhood and took it? I could have pointed my camera in probably almost every neighborhood in Cleveland and found similar scenes. And as Treasurer Rokakis indicated, he has the statistics. Ours is just visceral. When you go out into suburbs now, you can start to see this as well. And it is just, it's a rotting. And I think, Mr. Chairman, what's significant when we talk to local people there, they want to save these neighborhoods. They still have the infrastructure of neighborhoods in place. But in 5 years, I don't think that infrastructure will be there.
Well, thank you, Mr. Shield, for your testimony to this subcommittee. Mr. Rokakis, you've made a case about instability in neighborhoods in Cuyahoga County. Can you talk about how principal reduction would make a meaningful difference? And what have loan servicers said about it?
Chairman, I've been involved in this crisis now actually for about 9 years. We went to the Federal Reserve Bank of Cleveland back in the fall of 2000 with complaints about what was going on with loans and lending in Northeast Ohio in the hopes that the Fed would step up under HOEPA and take some measures to slow the runaway train down. So I've been involved with it going back to late 2000, very intensely involved in the past, let's say, 5 years with banks and counselors and workouts. And I have to tell you that I'm exhausted. And I find that the tools that we really need, as long as these are all voluntary agreements, we're right where we were when we started this process years ago. As long as all we have is maybe a carrot but no stick, as long as all we can do is rely on the goodwill of the banks. The words voluntary and the phrase loan modifications, bank loan modification, typically don't go together. And what we have found, I'm not surprised by the low percentage of workouts. We've experienced this for years. It's hand-to-hand combat. I think the one tool that we would like to have is the tool that you and other members alluded to, Congressman Turney. If we had the ability to force principal reductions of loans, I think we could pick a number, triple, quadruple our success of loan modifications. Mr. Chairman, what I find stunning is that when they refuse to modify those principal loan balances, typically the loan, they end up foreclosing, the family ends up leaving, the property ends up being vandalized, the home value is completely lost as opposed to partially some of the value lost, and it destroys remaining value left in neighborhoods. If we had the ability to force principal loan modification write-downs, I think we could make a real impact on this problem, but we're giving up, we're losing hope, Mr. Chairman.
Thank you very much for your testimony, Mr. Okakis. I'd like to go to Ms. Stringfield. I want to know a little bit more about your experience with the lending industry. You said that you've been able to refinance your home over the years, and since you bought your home in 1988, for about 20 years, you managed just fine with your payments. Now, all the time, could you tell us, were you marketed by your lenders?
Yes. They contacted me.
Did they try to get you to refinance?
Yes. How are you doing? How is things going? Are you having any problems? Yeah, things are a little rough right now.
What did they tell you about what kind of money you could get, what kind of loans you could get?
That I could refinance my first mortgage.
For how much?
Depends on what I needed. Like,
did they tell you your home was worth $420,000?
Yeah, yeah. I mean, when I talked to them, I told them that I took the loan out for $66,000, and when I refinanced with them, it was
you told them what?
$66,000.
And they wanted to refinance $420,000?
Because that's what the guy came back with that did the appraisal.
So what happened?
They came back, well, the first time they came back with the $422, I don't need that much. They says, well, you can get another $50,000 on your home, and that would pay your son's college. It would help you with your bills. Okay. And it's not going to make your payment that much more.
So they kept trying to get you to borrow more and more money on a house that wasn't worth.
When it turned out, when I came back to them and said, listen, I need to restructure my loan because my mom is really ill. I don't have any money. I need to get this restructured. I don't want to default on loan. All I want you to do is restructure it. Let me lower the interest, get it where I can handle it. And they says, well, we'll have to send somebody out and do the appraisal. This appraisal came out, and he valued the house at $325,000.
Wow. Now, when you told, you're getting this value of the house keeps getting bigger as they want to loan you more money.
Yeah.
Question is, did you ever have a discussion with them about what happens if you get in trouble paying a loan back?
Oh, yeah. I asked, I says, well, right now I don't have this money. What if I don't get, oh, Ms. Stringfield, you'll be all right. You can always work it out. We can help you.
They'll work
There's
with
not
you,
going to
right?
be any problem. We'll work with you.
Did they work with you?
No.
What happened when you fell behind?
When I got in trouble, the first thing I did was, from the literature, is call your mortgage company. Let them know before you get in trouble. I called before I got in trouble. I was told we can't do anything until you are 1 month late. Well, ma'am, I'm trying not to be 1 month late. The day of that call was May 3rd, 2008. No, 2007, true. 2008. And at that time, they told me I'd have to write a letter. May 15th, that letter was in their office because I faxed it in, along with a financial report of my earnings and what I had going on. They then had Hope Now contact me. The Hope Now representative said, Ms. Stringfield, you're overextended. You need to let your house go. I said, sir, I've been in this house since 1962. Why would I want to let go of my home? Well, you can't afford it. What you need to do is let go of the home and contact D.C. or Maryland and try to get into one of the welfare homes.
Now, you eventually did get in touch, though, with the National Community Reinvestment Coalition.
Right.
Is that right?
A friend of mine told me about them.
Did they help you?
They have helped me.
Well, I want to thank you for your for your answer to the question, Ms. Stringfield. We're going to go now to Mr. Jordan of Ohio for any questions you may have.
Thank you, Mr. Chairman. To our witnesses, thank you for being here. And you all were here, I believe, when Ms. Caldwell gave her testimony. Do you think the HAMP program has demonstrated significant progress over its 1 year?
I can't speak to the results in Arizona, California, Nevada. I saw the chart just like, I can only speak to the results in Ohio, and I can speak to the results in the community I represent, and the chart speaks for itself. We're third from the bottom. I spoke with a group of housing counselors who were on a conference call last week. I believe Mr. McCarthy was in on the call, and I found it interesting that one of the comments made by folks on the phone is they felt that servicers were more willing to work out a $500,000 mortgage in California than they were to work out $70,000 mortgages in Toledo or Cleveland or Dayton. And they felt that they had prioritized which mortgages were really worth their time and energy. Now, they might bristle at that suggestion, but I heard it from too many people on that phone call and others. So I think that chart, you have to look at that chart that we posted up on that on those slides. We're third from the bottom.
Significant progress or not?
Pardon me?
Significant progress or not?
In my role, I don't like to, I'm not going to comment per se on government, I'm not going to comment on whether a government program is making progress or not. I will say, viscerally, just going around Cleveland, and I've been in Dayton and Akron, you can see, you don't really, the charts prove it, but if you just tour the neighborhoods, I don't know whether it's this program or not, but there is an evident decline.
Yeah.
I've been covering Cleveland for 20 years. The neighborhoods do not look like what they looked like 2 decades ago.
Mr. Rokakis, you talked a lot about the counseling program. This is a local counseling program, is my understanding? Local people?
There are 4 counseling agencies we work with. I mentioned ESOP because at the request of the Attorney General and the Governor, ESOP expanded statewide. They have 11 offices around the state. They're very effective in doing what they do.
But there are people in Ohio helping Ohioans figure out what's at stake, what's involved, how their mortgage works.
Face-to-face counseling, not a call-in number, face-to-face counseling, which, as Congressman Cummings pointed out, is the most effective.
Understand. In your professional judgment, years of experience with this, years of being in Cuyahoga County, years as the treasurer of that county, something as a conservative Republican I believe in is, don't you think we'd be better off instead of having this $75 billion program, 116,000 mortgage modifications done, $3 million to goal, but only 116,000 done in 1 year? Might we be just a little better off if we said, instead of going with this crazy program, let's take a few of those dollars and let local people help local people, people like Ms. Stringfield, if she were in Ohio, or in the case of D.C. here, help them with some counseling, help them deal with it on a local level versus this concept that we just have so embraced around this town over the last year and a half, big federal government with regulations and spending taxpayer dollars and doing all the things they're doing. I think maybe that might be a little better approach.
I have seen 2 programs now. One was a program under the prior administration. I've seen this program, and obviously both have fallen short. The only thing I can tell you is nothing beats face-to-face counseling, one-on-one.
Oh yeah, I mean,
local people helping local folks. The
big federal government.
The difficulties faced by Ms. Stringfield, just multiply that by millions of homeowners like her who try to navigate these complicated documents, mortgages being sold once and twice and 3 times, servicers that aren't responsive. Nothing works better than a counselor.
Yeah, I just want to make clear, big federal government programs administered by Republicans are no better than big federal government programs administered by Democrats. That's the problem. So something on the local level done with a lot less dollars would be much better for the folks who are in a tough situation and, frankly, much more respectful of the taxpayers across this country who are paying for the darn thing.
I'd love to avoid those layoffs on Monday. And unfortunately, there are a lot of people going to be looking for help in Cleveland and Ohio on Monday that are going to get a tape-recorded message sending them to an 800 call-in number.
Thank you, Mr. Chairman.
Thank you very much, Mr. Jordan. And the Chair recognizes Ms. Capter.
Thank you, Mr. Chairman, for holding this hearing. I'm really honored to join my Ohio colleagues, and I want to thank this panel for being here today. What's left of democracy in this country, we are helping to move forward by your presence. And we are up against some pretty big forces. What's happened in Cleveland and in Washington and every place else is the largest transfer of wealth in American history. That has come from the equity, from the heart of America, and transferred to a group of people in some of the biggest banks in the world, here in our country on Wall Street and down there in Charlotte, North Carolina, who have no conscience for what they have done. In fact, their bonuses this year will be bigger than last year. Those banks are Bank of America, J.P. Morgan Chase, Wells Fargo, HSBC, and Citigroup. I was going to ask you, Ms. Springfield, and thank you very much for being here today, which bank were you dealing with? Are you allowed to say?
Wells Fargo.
Thank you. So it's on the list. The whole conversation about servicers in a way is irrelevant because you can't get at them. They're cleverly sandwiched in between the big banks who have all the power and are making all the money despite the unemployment rate of this country and people losing their homes, and Main Street America. You just can't get them, and in fact, by the servicers extending the servicing period, they're making fees all the time. So they're making more money out of your grief. So they have no incentive. Even though it looks like HAMP gives them an incentive to try to settle, forget it. They're making more money through the tax code and through servicing fees by letting the agony continue. It's interesting we don't have a list of who the 100 and 110 servicers are. We'll ask Ms. Caldwell to provide that for the record. But we have to put the pieces of this puzzle together. What didn't come out at most of the hearings in Congress yet is the securitization process failed. The banking system's been changed to not provide accountability and responsibility for those who created the damage. It's a very clever system. It is so clever. You have to have master's degrees in order to create, probably PhDs, to create this kind of house of cards. But they've done it masterfully. We need to restore the mortgage loan process. So, Ms. Springfield, you're not dealing with somebody way out there, but you've got a financial institution here in the nation's capital that you can deal with face to face, and you don't have to go through some absentee counselor here and some group here. But in fact, that the prudent lending system of this country is restored. And that's the real fight, because the net yield of all of this, over all the crisis that the American people are facing right now, is that the biggest banks that caused this problem, 5 of them, now hold over 40% of the deposits of this country. It used to be 35, 33. They're going to get half. 5 institutions are going to have that much power, and they have that much power. I was interested in what several of you recommended. Mr. Rukakis, you're a giant in my eyes. Thank you so much for what you're doing, and don't lose faith, because this is the process that should restore America, or at least we have some hope of it happening if we do our job right. And I want to thank our chairman. He's got the courage of his convictions, and he's trying to help us in a Congress that's really locked down and not holding the kinds of hearings. Ms. Stringfield, we should have 1,000 Americans like you testifying. But this Congress isn't meeting its responsibilities to the people, and our people are suffering all over this country. So your presence here today is very important, because it's like water in a desert. And so you're doing what you must do on behalf of many that are not being invited to testify by the other committees that should be a part of this. The idea of principal loan modification should be being done like that. And if the Securities and Exchange Commission and the Accounting Standards Board and the FDIC were doing its job, that would be happening. But they're not. They're not. And so what's happening is the net yield is those that caused this and have profited so handsomely, grossly, unethically, are being rewarded. And the only way that this changes is if conscious people in the press, like Mr. Shield, you keep doing your job. And Mr. Roukakis, don't lose hope, don't lose faith. You keep doing your job. And Ms. Stringfield, you work with the Community Reinvestment Group. They're wonderful. We have to keep doing our job and take this to America, because the people are losing hope. And we haven't lost hope. So this process really does work. And on the good news front, Secretary Geithner was before our Budget Committee yesterday, and I would like to suggest to the Chairman, he offered that Ohio could meet with him. We take him up on that offer. In fact, I was going to call you, Mr. Roukakis, because I said I know an expert who's not in my district, but an ESOP and many of the other groups. Through the Chairman's efforts here, maybe we can structure a session with Mr. Geithner, either directly by bringing people to Washington or through teleconferencing, where we can get the Treasury, and they shouldn't be the only ones in the room, we should have the FDIC and the SEC, and some bankers who really know how to resolve troubled loans on books in that room, and try to make it work for Ohio. And if we make it work for Ohio, it'll work for the rest of the country.
To respond to my colleague's question and suggestion, this subcommittee, in fact, and myself as chairman, we are in touch with Treasury and Mr. Geithner's office about this specific matter. And I'm glad that he responded to you, because I'm hopeful that he'll be similarly responsive to meeting with Ohioans in the Congress who want to see what can be done to try to save all these homes that are being threatened. If nothing's done, we could come back here a year from now, and what we'll see is the kind of maps that Mr. Roukakis presented today, just widening. There won't be any open space at all. And we'll know there'll be more people with Ms. Stringfield's story. And there'll be more reporters who will be covering neighborhoods across America that are boarded up and abandoned. I have to tell you, we're going to dismiss this second panel right now, but when I saw, Mr. Shields, your report, and I saw the claw of that steam shovel go into the house, I actually could feel that. I come from a neighborhood like that. I mean, I represent people in those neighborhoods. We all do. But I come from a neighborhood like that. The neighborhood in Slavic Village, in my district, I know the people who lived in homes like that. I know how people put their entire life on the line to get that kind of a house, who work day and night, who work their fingers to the bone to be able to just have a little something, to have a piece of that American dream, which is called home ownership. And then you see the big claw just crushing it. It breaks your heart, really does. Thank you all for being here with this testimony, and really much appreciated. We're going to go to the third panel. Thank you.